Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for Wednesday's daily talk of stock. And as we could see by the heat map on screen, it was a pretty nice, decent green day within the markets. We did have 72% in the winning category. We did see that the technology sector was a bit red today, but in general, the markets are very bullish because we know that next month the Federal Reserve is most likely to cut at their next meeting. Right now, about a 95% projection that does happen. So unless something crazy happens within the market, unless some horrible data comes out or some major shockwave, the markets should continue to push leading up to that meeting, which is next month. And so with that, we're going to talk about three different plays that we have talked about before on this channel and have a lot of potential. So first, we're going to cover the favorite, BigBearAI. A lot of investors have some mixed emotions with Big Bear right now because of everything that we have seen. And then we're going to talk about Robinhood stock, and we're actually going to finish off with an index fund. And the reason why is because with Big Bear, any investors in Big Bear know that it has been very volatile lately, and we did have that big drop off with their earnings. So the last play we're going to cover is TQQQ, an index fund that's triple leveraged, but an index fund just to bring a little bit of safety into our portfolios. Because I want to mention this comment right here, which came from my last video, and I appreciated what this user had to say. So Robin P commented, "Awesome job. Your analysis of BBAI was sobering. I'm invested big and holding, but could feel your frustration with their disdain for their shareholders by not disclosing all the information that we need." So that came from my last video. I appreciate the comment, Robin, and I like how Robin said that this was a bit sobering for them, because with Big Bear, I just want to remind everybody what you are investing into when you invest into the Big Bear. I cover Big Bear a lot because of the potential I see for the long term. I do believe that Big Bear has a lot of potential, and I am very bullish on the Big Bear. I think there is a lot of intrinsic value behind this company, but just know that when you are investing into Big Bear, you are investing into a value opportunity and into a comeback story. So with Big Bear, they have had a horrible past. When we look at the all-time chart, this stock has been down basically the entirety of the time that it has been on the market. So it had its all-time high shortly after it had its initial public offering, but there has been a lot of pumps and dumps within the Big Bear. And right now, when we just look at technical analysis, there is the chance that we are seeing a potential triple top in the Big Bear. So with this investment, just ask yourself if you are truly willing to hold for the long term with the Big Bear, because I have a lot of leaps on the Big Bear, a lot of options contracts that are set far out to expire in the future, but I did buy them back here and I did buy them back here. So I've been loaded into my positions for a long time. I am not sweating what is currently happening. I have taken some short-term profits while holding my long-term positions, but I do believe in the Big Bear over the long term. But in the short term, I think we could possibly drop back down. There is really only three scenarios that can happen. We could either bounce right back to the previous level that we were at right before the earnings report, which is between $6 and $8. There is the chance that we just consolidate and move back and forth between the level where it dipped down to a 480 and back to $6. And then there is the chance, what none of us bullish investors want to see, but there is the chance that we may see a triple top completely finish here in the Big Bear. It's looking like a triple top right now. And when we we look at the technicals, things aren't looking the most positive either. We are bleeding down on the relative strength index and then also on the MACD. So this is where I say just really know what your investment goals are. Ask yourself, are you willing to hold Big Bear for the long term, or do you have an unreasonable love for this stock? Just think about your risk to reward, because if you are willing to sit in the position and it goes down to, say, the the high $3 mark, $4 mark, say it goes to 350, 450. If you're okay with that, if you believe in the Big Bear, that's great. Add to your position. But if you are swing trading this or short-term trading this, don't get yourself caught in a position that you will regret. Because with the Big Bear, I am very happy with this investment. I am very excited in this investment, but I really did buy into this company at strategic times. So I bought after this big dip here, and then I was buying well before that dip also. And on both rips, I did take some profit while holding for the long term. And I liked the comment from Robin about it being sobering, because with Big Bear, another thing to look at really, if you are investing into this company, you just have to know that you are investing into a smaller company, and a company that has had a lot of problems in the past, especially when it comes to their financials. So not only have they had a lot of bad quarters when it comes to revenue, but they have also in the past been accused of having either sloppy or dishonest accounting. And then with the recent earnings report that we saw, we did see some really bad numbers, and things right now in general looking a little ugly for the Big Bear. So there is the chance that they do have some bad accountants at the company, but also there is the chance that they are fluffing the numbers also. You know, as outsiders, us who are not within the company, we never really know what is happening. And this company has withdrawn their adjusted EBITDA numbers for the rest of the year, basically taking away their guidance. And this is after a super ugly earnings report there. So there is still the chance that Big Bear may bleed down from where we are currently at. And just like I was saying in the initial video about their earnings report, and how I was saying there is the chance that we did see a short-term bounce back up to $6, well, that is exactly what has happened. But with that, there has also been a lot of short covering also. So there was about a 27% short interest in Big Bear, but after this event, we could see that a lot of shorts have covered. So some of the price movements that we have recently seen in the Big Bear, this rip back to $6, could be what some consider the rich guy buyout. And so what the rich guy buyout essentially is when a company drops off a cliff, when it falls by 20, 30%, usually there is a short-term opportunity, which is also coined as the rich guy buyout, which is where the stock will recover about halfway or maybe 70% of the way, but then drop back down. So if that were to happen, that would complete the triple top in the Big Bear. And again, I am not trying to be bearish here on the Big Bear. I am a bull over the long term, but we must also be honest with everything that has recently happened. So I did thin my position a little bit in Big Bear, and that is just because of their weak guidance and their bad earnings report that they did have. There is still a lot of positives with Big Bear, their strongest cash position ever, and also this company really is on the edge of a potential life-changing, for the company, life-changing contract from the United States government. So there is the opportunity at any time that Big Bear does gather another big contract, and we do see a rip up. And this is why I am investing into Big Bear for the long term, but I just want investors to really know how rocky the road may be coming up for Big Bear, which now leads us into our next stock, which is Robinhood stock. So we're talking about BigBearAi and how it is a value opportunity. Well, there is value stocks, and then there is also growth stocks. And so with Big Bear, we're hoping that it goes from value to growth, that things do get better, their quarters get better, they keep their debt down, they keep their cash up. But that is a hope for the future. We're hoping that we're catching that value opportunity. Then there is growth, where a company is already on that path, already has a strong balance sheet, already has strong cash positions, a proven business model, and that is Robinhood exactly. So Robinhood stock is accelerating not only when it comes to the growth in their revenue, but their share price also. So we do know that Robinhood this last year has had crazy growth, all the way from $35 and now sitting at $109. So with Robinhood, I do have a price target on this company currently at $120, and I do believe that it will reach that. So Robinhood did lose some numbers today, but it went from just about 117 down to 109. If that's the dip, I don't think that is too bad. I don't even think it's too bad if Robinhood goes back to 99, because I believe in the long-term growth with this company. So I am invested into Robinhood for many years to come. I bought into my shares a while back, and I am going to be holding those for many, many years. And that is, again, just because this company is very strong. So if you have felt some pain with Big Bear, this may be a good time to reevaluate your decisions, your goals, where you want to spread your portfolio to, because value opportunities are fun, and I really love small market cap stocks, but that is the risk that you run with them, right? So the markets are crazy. Just like we saw Downtown pop up by like 30%, we see Big Bear drop by 30%. So with those value stocks, sometimes it's a big coin flip, and you really are just kind of speculating, hoping that the company does perform, right? There's breadcrumbs, and there is information that you can gather along the way. But just like that earnings report came in with the Big Bear, that's the unpredictability that can happen with smaller companies. But with larger companies like Robinhood, they really do try to appease to the investors, and these companies are typically big because of the proven results. So Robinhood is sitting at a market cap just under 100 billion. I do believe that they will reach there soon. I do believe that this company will eventually be a $1 trillion company. As we could see by their revenue, they are accelerating there, and they have been meeting and beating all of Wall Street's expectations. And this company has a lot loaded up in the gun for the future, because they have done massive things this last year when it comes to sports betting, when it comes to their European Union tokens, and overall Robinhood is just a growing and expanding company. So I have a lot of long-term belief in Robinhood, and this is one of the companies that I am most invested into. And so just like the sobering thought, if you do want to escape out of a position that you may be feeling uncertain about or stressed about, Robinhood may be a good opportunity for you to get into, because Robinhood, for the most part, is a pretty consistent winner. But now, to bring you all to the life hack, the ultimate consistent winner, the winner that doesn't stop winning. When you are in this play right here, you feel like a winner every single day, and that is TQQQ. So the triple Qs, triple leveraged, right? And the triple Qs is essentially the NASDAQ, the ProShares Index for the NASDAQ. So when you are in TQQQ, you are basically just in the triple leveraged NASDAQ. And the reason why this is a life hack is because with the markets, again, we can make a bunch of analysis about any different company, but then they could just come out and bomb earnings and we'll lose our money. Even if we followed everything perfectly, there is the chance with these companies that something bad does happen and investors get hurt. But we could say, as investors, for the most part, what we could really bank on, what we could really just put our money down and bet on, is that the markets will continue to go up. So the markets always go up over time, and this is why this is a winning play, because when the triple Qs go up by 1%, you go up by 3% with TQQQ. And this article I wanted to pull up, I liked this, just talked about it. It just reached a new 52-week high, and that is why TQQQ is really the life hack because you are just betting on the markets to keep going up, and the markets should stay bullish the rest of the year. So some do warn about the leverage factor with TQQQ and how you could lose more money along the way if things do get bearish. And that is true. So that is one thing to not worry about, but just be warned of, I should say, is that when TQQ does drop, like in the early part of the year, it does drop at triple the speed. But the positive thing is it goes at triple the speed. So when it goes up at triple the speed, right? And so the NASDAQ this year, the triple Qs has been on a crazy recovery. I have been in TQQQ since the bottom. I am currently up 144% on my shares, and I have been purchasing options contracts on TQQQ. So if you want to feel sobered up from any investments that are causing you fear or stress, seriously look at this play, because I cannot say enough good things about TQQQ. And if you really want to be in an investment that you don't even have to look at, this may be the investment for you. And there's a lot of positives in this too, because not only is it a consistent winner, I mean, this is the boxer that basically never loses. This is Floyd Mayweather. With the triple leveraged Qs, you know that every single day you are going to win, most likely. There are the red days, but there are many more green days within the month. So for like every 1 or 2 red days, there's another 5 to 10 green days to cover that, right? And if you are in the shares, you also get a dividend. So they declare a quarterly dividend for this time around. It's going to be at 21 cents per share. So you're winning. You're getting dividends, you're increasing your portfolio, and you don't have to feel stressed because it's just the overall market. So if you're a bear and you think that the markets are going to go down, maybe this play is not for you. But if you are bullish on the markets in general, at least put just a little bit of money away into the triple leveraged Qs. I promise you, it really is a wonderful opportunity. And even though I don't always talk about it, I think it's a great play. I love to talk about these small market cap stocks because they provide a lot of fun and they can provide a massive return on investment, but they are a bit more risky. And so Robinhood and TQQQ may be some good places for you to park your money if you're looking for a bit of safety and still some massive return on investment. That was Wednesday's daily talk of stock. As always, I appreciate you guys for being here. I would love to hear what your opinions are in the comments section below. So please let me know if you're invested in any of these plays. And if you are in Big Bear, please let me know if now you are more bullish or more bearish. Again, myself, I am remaining a bull on the Big Bear over the long term, but I am aware that the road may be rocky in the short term. I would also love to hear opinions on HUD and TQQQ. So anyway, guys, thank you so much. Please leave a like and please subscribe to the channel if you haven't already done so. I will see you guys in the next daily talk of stock.